Well, and obviously we are all watching what's going to happen in November. The outcome definitely we're going to shape the world over the next 4 years. So something that we watched. But at the same time, I look at Asia credit. We have actually weathered through all this U.S.-China tension relatively well. You look at Asia credit market. I think you can say that in terms of volatility, we have actually outperformed many other regions in terms of in the first quarter of the year when even compared to U.S. Investment grade or U.S. high yield, Asia credit actually has turned out well. So I presume this resiliency will continue, and that's still going to help us to weather through whether who's going to come to the White House.
What do you like specifically now when it comes to Asian credit? I know you say that Asian credit has passed the trough of the current cycle.
Yes, obviously, Asia credit have passed the trough. If you look at the rating trend, we have seen a spike in a downgrade in the third quarter. But going to in the second quarter, going to the third quarter, you start to see that Asia investment grade actually started to see more upgrade than downgrade. So that's really kind of showing you that credit have turned the cycle for investment grade. For higher, yes, obviously we still have more downgrade than upgrade in the third quarter, but even then, the number have come down quite a fair bit from the second quarter. So we can say that the Asia credit have definitely turned the corner from here. So where do we like? I think right now we are a bit more defensively positioned. We still like a couple of utility name, a very defensive position, and also we do like quasi sovereign. Those rating are going to be tagged to the sovereign, and we are generally expecting that the sovereign rating to be stable.
So Chong, it's Hadley out in Abu Dhabi. Just in terms of what you prefer, corporates to financials, what looks good to you at the moment, and how would you play this with just 2 weeks to go before the U.S. election?
Right now, we have a preference for corporate over financial. Just because just now I think we talked about that, in terms of corporate, you look at the first half number to some degree, we do think that, in terms of the corporate have hit the bottom of their credit cycle in the probably in the second quarter of the year. Whereas for financial, it's still going to be more challenging. NPL ratio have not fully show up in the balance sheet for the banks because of banks have been asked to be more forbearance. So that's going to show up over the next few quarters. So from that perspective, you can say that the fundamental pressure for bank is still going to be there, whereas for corporate is more or less is actually the worst behind. So our preference is to own the corporate investment corporate over the financial right now.